Good morning and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin from DecisionPoint, and I'm here with my father, Carl Swenlin. It's been a few weeks of a break. I've been on vacation, but I'm ready to get rolling all over again. So let's see. First thing I wanted to let you know is that the Q&A box is for you to ask us questions and send us symbol requests. We can't guarantee we'll get to all of those symbol requests, but we will do our very best. And if you'd like to chat amongst yourselves, I do have a moderator in the chat room. I'm pretty sure he's here, and he would be more than happy to get the chat going in the chat room so you guys can talk amongst yourselves about what is interesting in the market to you currently. So yes, remember Q&A for your symbol requests. That's the box that we will be paying attention to. All right, and without further ado, I think I'm going to pass it to you, Dad, to give us the update on what's happening in the market in general.
Okie dokes. Let's go to share my screen here. I'm going to start out with the Magnificent Seven plus Tesla group. This week we have earnings coming out on Apple and Amazon. That's Thursday after the close, but for both of them. So last week we were on pause waiting for the Fed. I think this week it looks like we're on pause waiting for the Apple and Amazon earnings. Here, Apple has been straight up since the December or January low, and it's getting very overvalued. Let's take a look at the weekly chart. Right, it's been making new highs, new all-time highs, and it's due for a rest. We've got this artificial intelligence story, and for a long time it was, oh, it's going to kill everybody, and then suddenly, about a month or two ago, it became a story that anybody that has AI involvement, stocks going through the roof. So the story changes. We don't know actually how this is going to work out, but that is part of it. There's a lot of speculation on what AI is going to result. It could be something akin to the automobile putting the buggy whip companies out of business. So I'm not negating it. I'm just saying we don't know what the story or how it's going to unfold. Let's go to Amazon. Also been on a pretty good tear here, up 67% since the December low. Let's look at the weekly chart. Okay, this is really pretty nice. I could say this would be a reverse head and shoulders pattern or a double bottom here. And it's long since outstripped any upside target, I would say. The main thing about this is that this is the declining trend line here. You've got this rounded top. It broke down into that low. So now I say we're in definitely a bullish mode. The weekly PMO is rising. Google up 60% since the November low, and it's broken out last week. We've got a potential island reversal here. Just something to watch out for. Let's look at the weekly. Okay, again, you've got this major long-term top, a correction. How much did that correct? Let's just check that. Okay, 45% decline. That's magnificent. So this is definitely a bullish-looking chart. Again, the weekly PMO is rising. Native platforms, the old Facebook, very similar. We got a rising trend off of the November low. Let's look at the weekly chart. Again, major top, really a major decline. That was a monster decline. Let's just check that. 76% decline. So looking very bullish at this point. It's also looking very overbought. All of these are pretty much overbought and are due for a correction. We don't know if they're going to get one, but they're due. Here, Microsoft, I've been using 2-year charts for these stocks, but I decided to go back to 1 year because it was getting too crowded. And we've got basically a rounded bottom or saucer formation here. Then now it's forming a handle. Make it correction down into this area. That's something like that. But I'd say a saucer and a handle is bullish formation. Okay, Microsoft had an all-time high back in 2021. It's exceeded it here, but I'd still call this a major double top. So we need to watch out for that. This is the weekly chart. The weekly PMO is top. That is bearish. Netflix. Here I've emphasized 2 parabolic up moves. Whenever they break away from the normal trend line, you can expect, when they go parabolic, there's going to be some kind of correction. This was not serious. It just moved to the side and then had another short parabolic up move, which is broken down. But whenever you see a vertical, it's a sign to look out. And in this case, this was in a daily chart, so it's not ultra serious unless there are other factors to consider. NVIDIA, this is an interesting one. I looked at this morning, but here we still have this. It's kind of an elongated island. I'm not sure we can still call it that, but we do have this breakaway gap, and it could easily. It wouldn't surprise me if it jumped back across here. Have no reason to believe that it will, but this is a kind of formation you watch out for. Let's look at the weekly chart. Okay, it's getting really overextended, and look at the PE. It's just ridiculous. And again, this is a stock that's like a premier. It's like top of the list for AI. It's just again, something to be aware that story could change tomorrow for some reason or other. The weekly PMO is decelerating, but it hasn't topped, but it is very, very overbought. And finally, Tesla. It's up 194%, or has gone 194% from this low. The big problem with Tesla is the long-term picture, I'd say. And what am I trying to do here? Let's look at the weekly chart. Okay, we had a nice rounded top here, major topping formation. And how much did it punish the holders there? 75% decline. Now it's rebounded out of that. It's broken out from the declining tops line here, so it's on its way again. Again, it's like a PE of 76. It's way overvalued, but it's one of those things that one of those stocks that it doesn't really matter. People aren't paying attention to the fundamentals on this. And my prediction is that the EV space is going to have a terrible downturn one of these days. I can't predict when, but it just doesn't add up. Oh, there's a a cargo ship in, I think it's in the English Channel, has EVs on it. It's on fire, and that's not going to have a good end. But so that's the kind of thing. I've had a gas-powered vehicle in my garage for 60 years. Never worried about it catching fire, even though it has gasoline in it. But if you bought an EV, you just one of those things it can do if whatever it wants to. I'll get away from that. Okay, back to let's look at did I say Yellow Corporation is going to declare bankruptcy, and I didn't catch whether it's going to be a Chapter 7 or a Chapter 11. But let's look at the weekly on Yellow. Yeah, that's not really sure. This is the story. This is the monthly. And
yeah.
Yuck. Okay. All right, looking at the market, here's SPY, basically marking time as basically unchanged, and still within this rising wedge formation. And we normally expect that to break down, and certainly the stock market is in a period of negative seasonality for 6 months. We got 3 months remaining of that period, and it's been straight up, of course, during that first 3 months. But never fear, we will probably see some negative seasonality kicking in, and the market is due for a correction. Let me just look at the 1-year chart. Right. So I think we've been rising since October, about 8, 9, or 10 months here. I think we're going to see a correction pretty soon. The sentiment is wildly bullish at this point. You can look pretty much anywhere at sentiment indicators, and it's super. People are super bullish, so that's a good time to be looking for a downturn. Okay, here are the primary indicators that we follow. The short-term indicators, this is the short-term breadth momentum, short-term volume momentum, and they have essentially been bullish during this time, but got overbought. They bled off, so they're not overbought so much anymore. So that in that time frame is not much of a threat. But the intermediate term indicators, the intermediate term breadth momentum and volume momentum, they have topped out in overbought territory. So that's another sign that we should have a correction coming. I wanted to look at the weekly chart for the market. Notice we're getting it's getting ever steeper. So again, when it gets too steep, it's probably begging to have a correction. Let's look at the monthly chart. Yeah, here we can see a nice parabolic on that chart. So as it approaches this former all-time high, we're really looking at a probable double top here. The monthly PMO is rising, so that's bullish indication. Let me look. I didn't check the weekly PMO. Yeah, it's still rising. It looks good. All right, let's see the dollar. Dollar has been rising from the July low, and seems maybe it's topping out. That would be a good thing for gold if the dollar started going down. Gold, we had this rounded top, which was bearish, and it broke down from that, but then it recovered. We got a cup with now forming a handle, and let me get rid of that mess. Okay. So right now we're in the process of forming a handle. This is good. Let's look at the weekly chart. This is end of day, so we're not seeing today's up move, but it looks like we're over $2,000 an ounce. The thing I've been focusing on, possibly obsessing on, is these three tops. We've got this one, and this one. These two were vertical moves, which always beg correction. They don't always get correction, but that's, you should be looking for one. And after this major pullback, it started another up move, which is much more deliberate and putting more work, solid work, and in getting up to this point. It was turned away, but I think the next shot is going to do the trick. I think we're going to see it breaking into new all-time highs and another, extending this rising trend here. We don't always look at silver, but we should. And we've got not as good looking as the gold chart, I would say. And let's look at the weekly on that. Yeah. So here's the all-time high, and it's not recovering that well from that. I think it's going to have more trouble than gold, because I think people, when gold it starts making new highs, people are going to pile into there. We've got USO, crude oil. We have been watching this rising wedge formation, which we would expect to break down, but it's basically crawled along the bottom of that top line, and today it's broken out of that. That is bullish. And as a matter of fact, let's look at the energy sector, and we're having a nice move in the energy sector. That's doing the best, I think, today. And bonds, we're looking at TLT, which is the 20-plus year treasury. Found support here. It's found support again, and it's rallying off of that. Let's look at the 10-year treasury yield. This is here. We have a saucer formation, which is bullish, and with rates of the Fed continuing to raise rates, I don't see a lot of downside for yields at this point. Let's look at our yield array, showing from the 1 month to the 30-year, and it's inverted. These are the 1 month, the 3 month, and this is the 1 year, and they're at the top. And I'm going to have to roll my 1 years in October. I hope it holds up here. And anyway, it's in a consolidating phase, and for over a year, almost a year, and it's rising in that trading range. Wanted to look at the 30-year mortgage. Here's the all-time low, and it's just shot right up from there. We're very close to these new highs. The last one we were at 6.81. What is happening in the real estate area is the people don't want to sell because they don't want to get involved with these high mortgage rates, and the buyers don't want to buy with that. They don't want to get these high rates, or they cannot afford the payments under the new rates because, for one thing, the seller is not going to be able to get the kind of price he would have 2 years ago. And the buyers are not going to be able to afford at the new rates. They're not going to afford the monthly payments, many of them. Okay.
Bitcoin.
I always forget that. Okay, Bitcoin. It's gradually deteriorating out of this recent high. And let's look at the long term. I have no idea. I think that there's so many people that have out of luck from this point on down, and I'm not sure that it's going to be able to overcome that overhead supply. But it is in a rising trend. Actually, if I drew the lines, there would be the rising trend, and then across there, that's a rising wedge, which predicts a down move. And let's see if we have you seen any questions?
Oh, let's see. No, looks like all symbol requests. With several stocks with a downtrending PMO, why are prices still stabilizing or pulling back a small amount? So we've got a lot of PMOs in decline. And the question is, why haven't we seen a big decline off of those downtrending PMOs?
Okay, let's just look at a chart here. Let's see. Okay, this PMO is not declining. Well, it is declining. Okay, if the PMO is above the zero line, that implies strength. Now, when it's rising above the zero line, it is a pure expression of strength. There's no lack of strength involved there. Now, when it tops out and starts moving down, that means that it's not as strong. But like here, it's been moving sideways. That's an excellent configuration, really, because it means that there's a steady upward push for this stock, in this case, SPY. And it can fall, it can rise, the price can rise even when the PMO is falling, because when it falls, it's telling us that it's not rising as, there's not as strong an up push, but it's still, as long as it's above the zero line, it's a favorable situation. Now, if this PMO really starts to drop like a rock, well, you'll see that in the price. And that's when root weakness has definitely moved in. But right now, we're not showing any lack of strength. Okay, any other ones?
Nope, that's the major one. I think really the ultimate thing is that just because the PMO is in decline doesn't mean that price is necessarily going to fall with the PMO.
Right. You know what? One of the charts I probably ought to look at is the bias assessment.
Oh, yes.
So here we have the Silver Cross and Golden Cross indexes. Silver Cross is the percentage of stocks in the S&P 500 that have their 20 EMA above their 50 EMA. And the Golden Cross is the percentage of stocks that have their 50 EMA above the 200 EMA. That's why it's called the Golden Cross, because it implies a very long-term favorable situation. Silver Cross, that's my name that I came up with, the 20-50 crossover, because it's a intermediate term and it's not as favorable as the Golden Cross, but it's intermediate term paper. So we are in an overbought position on the Silver Cross. Golden Cross is not as strong as it ought to be with this, with prices coming up to here. But again, we have this ungodly balance, cap weighted indexes. I never figured that out. It just doesn't make any sense to me, but there it is. But they did rebalance the NASDAQ 100 last week. They had the 7 of the largest stocks made up about 52% of the index. I can't, my numbers here. Yeah, 55% of the index. So they had to rebalance and get that down. But those stocks are still it didn't affect what's going on with the S&P 500. And they never rebalance there. That's all straight cap weighting. Okay, and then we've got stocks above their 20, 50, and 200 EMA. They're all coming off strong readings, and that means there's weakness coming in. Let's see, we have the Silver Cross is at 85, we'll say, rounded. So the lowest number here, it basically tells us where that is probably headed. So right now, I'd say the potential is to go down to 68, and that should have some attendant price declines. And we have the 50 and 200 EMA indicators are showing about 70, let's just say 77, and it's at 67. So it's basically in a situation where the Golden Cross Index could actually go higher right now with these two like this. And I think I am definitely going to pass it off to you, Erin.
All right, but I got one more chart for you to look at, and that is RSP. We did get a request for that, and since we were talking about cap weighting, it seems like a good time to look at that chart if you don't mind.
I don't mind. Let me get a new chart, and that was RSP.
Yes.
Okay. You know what? I have.
Yeah, I was going to say
Here, this is not a chart of RSP, but we do a relative strength calculation of SPY versus RSP. SPY is cap weighted, RSP is equal weighted. Now, an equal weighted index that still suffers from cap weighting intrusion. So, and they have to rebalance them every quarter. I'm going to not harp on that. Okay. So we've been showing from March until June, we've been showing the SPY being stronger than RSP. And now it's basically leveled off. So they're performing equally now, roughly. I'll do the RSP. Okay, and then of course it looks a lot like let me look at the weekly. It looks a lot like SPY. So it's got a little ways to go before it catches up. Let's see, from there, about 3%. Okay.
All right. Sounds good. Let me switch over. We're going to look at some of the sectors and see what's going on with them and move on to some of the industry groups. So let me go over here. So let me also update this. All right, so these are all of the sectors in a candle glance with the PMO and the stock charts technical rank. When I was looking at these before the trading room started, there were some kind of obvious areas of strength and weakness coming in. XLF is starting to see a PMO that's turning over. Prices also turning over. We haven't lost the rising trend here, but if we were to draw these rising bottoms in, we would see it's getting steeper and steeper. These last two bottoms forming a rising trend have been broken. I don't have that annotated, but I think you can visualize that. XLV had a really nice run while I was out of town, and now it is starting to pull back in a serious way. The PMO is now topping. So I would say healthcare is a place to be very, very careful if you have positions sitting in healthcare. Industrials, here we have the PMO turning over, we have the PMO sell signal. But as we were talking, when you've got a really strong move to the upside like this could just be an absence of, that internal strength. We're starting to see a little bit of weakness coming in industrials. But I don't like the look of that PMO. It's not somewhere I'd want to be based on that. You can see real estate also starting to top out here, double top, holding support here at the 200-day EMA. So far, looks like we might get a long-term trend model buy signal with the 50 crossing above the 200-day EMA. But that will be canceled if price drops below that 200-day EMA. So if we do get that long-term trend model signal, I wouldn't be putting too much emphasis on it, because there's a high likelihood that it'll whipsaw right back into a sell signal. Technology, this is an area of strength. This is kind of what we were talking about earlier with the with falling PMOs and rising price. We have had a really nice run here in technology. It still looks healthy enough. And meanwhile, the PMO has moved much lower. So it's now out of overbought territory. And really, if it turns back up, there's room for it to continue higher for technology. So this is telling us that we have lost a lot of that momentum, but we're above the zero line, as we were talking about, and price is still holding up and stabilizing, as we were talking before. So it's somewhere to keep an eye, because we are losing that momentum. But overall, we're seeing internal strength because the rising trend hasn't really been extinguished despite the declining PMO. XLU looks like we might be getting a surge above the signal line here with the PMO turning up above it. But I don't see anything great going on here in utilities. Big decline. Looks like we could find a little bounce coming up here off of these key moving averages. But overall, stock charts technical rank is in the basement. I don't see this as a good place until we start seeing some weakness in the overall market. Where is the strength? XLC, comm services, is looking pretty healthy here with the PMO buy signal currently coming in on it. Prices still rising, hitting all-time highs. This looks like a pretty strong area of the market, which is kind of interesting given the strikes that are going on for the writers and the actors currently as they talk about getting profits out of streaming, which is a whole nother conversation we could have, but we won't have it today. But it hasn't hurt comm services. There are plenty of other areas besides entertainment within comm services. And really, when you look at the Netflixes of the world, Hulu's, et cetera, you really have got, it's a subscription service. It's going to continue to hold up as long as it keeps its subscribers. That's kind of how this subscription system works. And how that's going to be affected by the strikes, no idea, but you're really comparing apples to oranges when you're talking about ad revenue versus subscription revenue. So I think that's going to be an interesting area. But right now, you can't deny the strength that's coming in here and that PMO buy signal. XLY had a nice pullback, is starting to make a turn. The PMO is trying to turn back up here. So discretionary looking very interesting. Consumer staples looking like it's going to top out here, but the PMO is still rising. Maybe just an orderly pullback here to give us another jumping off point. Staples and utilities are going to be a place to watch if the market starts to make the turn. And if these two sectors with healthcare really start to show some strength, that's actually not going to be good for the market, because those are defensive areas. And if money starts moving into those defensive areas, it's going to leave those growth areas. So we have to keep an eye on how strong these defensive sectors are. Right now, I don't see a whole lot of strength here in those sectors, so I think we're still safe as far as rising trends go. XLB looking good, but energy certainly has the advantage here. Straight moving up PMO, it is on the overbought side, but price, nice basing pattern here, that saucer shape, and continuing higher. Looks like it's breaking out today above that prior top. So I see more upside for energy coming in. Certainly we've lost a lot of if you didn't get involved back here, there's certainly a lot of profit that's been lost over that time. But ultimately, it looks like we're going to see even higher prices in energy. And with USO breaking out, I think that that's going to bode well for the energy space as well. Look at the stock charts technical rank really starting to make a move to the upside. So energy looking especially good. Let's go and look at some of the industry groups. I'm going to concentrate on energy, and then we'll get right into our symbol requests. But energy showing the most strength, so we figure we should look inside that group and see what's going on. Oil equipment and services making new highs. You've got integrated oil and gas breaking out right now. That looks very interesting. The PMO moving above the zero line. That looks like a very interesting place to move into. Exploration and production is just clicking. We now have a long-term trend model buy signal coming in, breakout above these key areas of overhead resistance. Certainly there's more arriving, but this doesn't look too bad for exploration and production. Pipelines, I'm not as thrilled with. We are getting these moves, but it looks like it's kind of in pullback mode here. PMO is very overbought, so we want to keep an eye on that particular industry group, but I think the others look more healthy. Coal making a move. It does have the 200-day EMA to contend with, but if we get a breakout above that 200 EMA, coal is starting to look very interesting as well. Stochastics turning up above the 80 mark, which shows internal strength. So honestly, I would say all of these look pretty healthy and good. Integrated oil and gas really catching my eye. And pipelines not looking quite as good, in my opinion, based on this overbought PMO, but certainly could continue to show strength. But those are the two groups that I really like. And I think coal really should have a place in your watch list, because this is looking very interesting with the possible breakout above the 200-day EMA. All right, let's go ahead and get into the trading part of the trading room. I do recall that I had a request via email for ESEA, so we're going to start with that one. This is my daily chart setup. I've got the RSI on top. There's our PMO. I like to watch what the stochastics are doing. It tells me if there's internal strength or not. And then I compare relative strength against the SPY for the industry group. I do relative strength against the SPY for the stock. And then I like to pay attention to what the stock is doing against its industry group. Do we have a stock that's showing leadership? Right now, it's performing pretty much in line with the industry group. So I'd say with this outperformance against the S&P, this looks very good. PMO turning up almost to a buy signal. We are getting ready to hit some overhead resistance here. But overall, I mean, this stock looks like it's getting ready to make its move to the upside with marine transportation. I know that IYT has been looking pretty good. And I'm going to go to that really quickly because we do have the golden and silver cross for IYT. So you can see transport's on a really nice move to the upside, really steady rising trend. I imagine if we drew in the lines here, it would be a rising trend channel more than likely. PMO is on the overbought side, and certainly with 100% of them, and again, this is only the 20 stocks within here, so we don't want to get too excited about these numbers, but the fact that we have 100% silver cross index and 90% on the golden cross index, these are really overbought numbers, and we're starting to see some decline in the participation. This is telling me that we're getting ready for a pullback. I would be very careful with the transports right now. I think that these look good as far as numbers, but when I see that deterioration under the surface, sort of like what we're seeing on the SPY right now, these numbers, the silver and golden cross numbers, are going to start moving down. And that's generally not a good time to be involved in whatever it is you're in. You can see that top to that low. The last time we had a top on these, you can see back here and back to this low. So we're really due for a pullback here in transport. So be careful with ESEA. All right, next up.
XLSR.
Okay. All right. Another one with really overbought PMO. I don't like the way the PMO is topped beneath the signal line. While this is a pretty nice, steady rising trend, that little thing right there is really bothersome to me. You don't want to see the internal, you don't want to see that momentum starting up and then immediately failing. That tells me to look for a pullback here. I would be really careful with this one. This is let's see, an ETF, sector rotation ETF. Interesting. I'm not sure what the background is on that one, but it's certainly in a nice rising trend. But this tells me short term, there might be some problems ahead.
Okay, NCLH.
All right. We were talking about consumer discretionary, looking kind of interesting. Wow, those are some really that looks like a reverse island in the making here. Filled black candlesticks are bearish candlesticks. This one didn't result in anything terrible, but it did have another filled black candlestick. We are seeing a bit of a rise, but it looks like another filled black candlestick coming in here. PMO is on the decline. I would, that looks like a reverse island to me. I don't trust this rally. Stochastics are telling me I should probably trust it, and relative strength is looking fairly good here. But this isn't the kind of stock I want to be involved in. It's really hesitating right now, and I don't like to see that in a stock that I get involved with, and a PMO that's in decline. This one looks vulnerable, certainly could be considered a buy, but I wouldn't want to add it to my portfolio. Let's just go to a 5-minute chart. We haven't looked at those yet. Let's just say we had this and we were looking for a sell point. We are at the sell point. You can see where the 5-minute PMO is turned down. So that tells you that this is a sell point anytime that PMO turns down. If we were looking for buy points, we want to see a PMO crossover combined with a positive RSI. So back here was your last buy point. So let's see, right in there would have been on this particular candlestick. Certainly would have worked out pretty well for you. And then right there is when it declined, and that would have gotten you out on a day trade. I'm not proposing day trades, but I just want you to get a feel for how powerful these 5-minute candlestick charts can be as far as your entries and exits. And we are in a trading room, so you need to know how to trade. This is one of the ways you can do that with the 5-minute candlestick. If anybody is interested in getting these chart styles from me, my daily chart style or the 5-minute PMO chart style, I'm happy to send that to you. Just send me an email, support@decisionpoint.com, and I will get that to you.
BZH.
BZH. All right, home builders. Wow, very interesting. I wish I had a silver cross on that one. Nice move to the upside. Looks like a pullback after a really big rise. I mean, it's a painful pullback right now, but when you're talking about a move yesterday of, wow, how much did we have? Almost 25%. I would be expecting to see more of that pullback as people take some of those profits. But this is a really nice push to the upside. And I would think that we're going to see some follow through on this one. I would just be watching to see where I could maybe get in a little bit lower here. PMO is overbought, so we do need to be a little careful there, but you can see certainly outperforming its group, outperforming the S&P. The group itself is in a rising trend as far as relative performance. in home construction. I like the look of this, I will say, but I would want a better price point than what we're getting here. Let's see the 5-minute chart. If you were interested in this one, we did get a buy point that came in right about there. Pretty much the buy point is higher than where we are currently at. So you could make a case for an entry right now. But given that RSI is negative, I think we're going to see a little more pullback. I think you could get a better price point on this. But like I said, getting involved now, I think it's going to hold some risk. But we should see some follow through when you look at a move of that magnitude to the upside.
IJR.
Let's go to, we happen to have the Silver Cross and Golden Cross Index for IJR. So let's really dive in under the hood. You can see right now that the PMO is surging above the signal line, which is a very good sign. Silver Cross Index is definitely getting to the overbought. And well, it is overbought. I wouldn't say on the overbought side, it's overbought, but it is starting to rise again. But we know, based on the fact that we have lower percentages on the price, stocks above their 20, stocks above their 50-day EMA, that's in decline. And these percentages are lower than the Silver Cross percentage. It's maybe surging right now to the upside, but more than likely, we're going to see this top out here. And you can see that the while there's still some strength here going on, this is a little bothersome to me, is that we're going to see a top on the Silver Cross Index. Last time we saw a top on the Silver Cross Index, we did end up with a pullback here, a corrective move. So I would be paying attention closely to that as we get up here to overhead resistance. But we want to see the small caps doing well. We want to see them performing as well as the S&P, because that means that this rally is broad. I like the way we have had this move to the upside. So we are seeing a broader rally than we have in the past. And I think that's good. The surge above the signal line is good. Just keep an eye on overhead resistance here. And we do need to keep an eye on this Silver Cross Index, because if we really do see that top out in a major way, which we could certainly see, given these percentages are lower than the Silver Cross Index. So overall, I'd say short term, it looks healthy, but in the intermediate term, we need to be very careful because participation is beginning to wane.
If the market corrects, small caps will correct as well.
Absolutely. And they could get hit harder. That happens a lot of times when, the large caps start to fail. Right. Usually you don't see small caps pick up the slack. They usually fall in a pretty big way. So we do need to be careful.
Verizon, DZ.
Let me just get a sense of this. I don't like it just on face value. As soon as I saw this price performance, I don't like it. The EMAs are configured as negatively as they possibly can be, with the slowest one on top and the fastest EMA on the bottom. Price hit the 50-day EMA and failed and has moved back down. I see that the PMO is rising here, but it is beneath the zero line, and we need to see a little more force with the PMO on the rise here. Stochastics, they're rising and they're in positive territory, but there just doesn't seem to be a lot of force going on here. And I really wouldn't be looking for a breakout here. I would be looking for downside. So I don't like Verizon.
The PE is spectacular.
Yes.
And the annual dividend is yield. It's fantastic too. But I'm not saying that as a recommendation, but that's something to consider. Right.
And, if you owned it, and depending on when you got in, that probably could make it worthwhile to stick it out. We are at these lows, but I just short term, this just doesn't look good to me.
DKNG, that's DraftKings?
Yes, it is. Every time I see, I think ducking. I think
Darkwing Duck.
So let's see. I know this was a prior diamond. in the rough for our decision point diamonds, and it certainly has performed as we would expect and want it to. It's consolidating right now. The PMO hasn't completely lost touch here. It is curving down, but price is consolidating after a really big move, and it's still outperforming. Stochastics are a little bit iffy here, but I could see there's your gap right there. I could see setting a stop right about there. That's about a 7%, 7.5% stop. So I could see getting involved with this one, but I definitely want to have my stop ready in case this new level doesn't hold up. The PMO is, like I said, looking a little iffy here, but I think it's just a matter of price has slowed down. It's consolidating a big move. So PMO isn't as overbought as it can get either. So I think it's worth a hold. I don't know that I'd necessarily be getting involved. And if I did get involved, I'd want to have my stop set for sure on this one. 5-minute chart real quickly. Buy point, an aggressive buy point has come in. You can see the PMO is crossed over, but we don't have the positive RSI yet. So conservative buy point isn't here. The aggressive one is in. Sell points, you'd see one back here on this big candlestick, but overall, I mean, you're at a good buy point, I'd say, for this one. Just make sure you set a stop if you get involved with it.
MTW.
Commercial vehicles and industrial. This looks like a double top. PMO is in decline. It's holding the 50-day EMA. So I think I would probably hold on to this. Stochastics are starting to turn back up. I don't buy anything where the PMO is in decline, but I could see this as a possible buy just because it is holding the 50-day EMA and looks like it wants to rally off that point. But the PMO is in decline. So I can't say that this is a really good buy right now, but it's certainly looking interesting. This double top is still a problem. It hasn't been broken. The pattern is still in force, if you will. It held the confirmation line this last time, but I think there's a lot of vulnerabilities here. I don't know that I would want to, I think this carries more risk on the buy side than I would be willing to take.
We have a question on Amazon from Marlene. Should she sell some long-term investment before earnings? That's a hard one. That depends on a whole lot of things.
Right.
Yeah, I don't see it as being a sell at this point, but earnings could blow it right out of the water. I don't know.
Right. Well, I think there was a news item too that they're getting ready to have to deal with an antitrust lawsuit over Amazon Prime, which makes me a little nervous about the Amazon stock just on face value. Selling into earnings is a preference. I don't know that there's a right or wrong about it. Certainly carries risk if you're going to hold through earnings. I know my friend Tom Boley never holds through earnings, and his whole website is about earnings, earningsbeats.com. So he doesn't like to hold through earnings. You can take that for what I've held through earnings, but I need to make sure that I have a pretty solid chart. This is pretty solid, but this just looks a little bit toppy right now. I don't know. I would probably want to. I don't want to say anything as far as a recommendation goes because I don't do recommendations, but I could see selling part of that position going into earnings just so that you protect some of the, cost basis of what you got.
But even there, it depends on what price the person got in. So
exactly.
Let's move on.
Okay.
AROC.
Oh, really nice move. Oil equipment and services. Remember, that was a place I liked. Certainly overbought. RSI is telling us we're overbought here, but really nice performance against the group. The group has sort of settled in and is performing about as well as the S&P. But like I said, looking at that industry group chart, it looks pretty fantastic. Stochastics above 80, rising PMO. This is a hold to me. I think you could get involved, but I think there might be some better choices as far as a new buy within energy. Like I said, coal looking very interesting. Nice breakout. I could see getting involved in this, but again, you've got an RSI that's pretty overbought. I think you're going to get a pullback here that might offer a better entry. Probably a pullback to this level of support is my guess. But strong PMO, I think even if you got involved now, you're going to see some upside follow through on this one. I think the energy overall looks very, very positive.
We have a request for Triton. I don't know what the symbol is.
Well, let's see. I'm going to actually move this to a log scale chart, which I hesitate to do.
Wait,
but I want to see what's going on.
When you see a pattern like that, it implies there's been an offer to buy, and that's the price they want to buy at. So I don't know if that's the case here, but that's the first thing I think of when I see that kind of a pattern. Right.
I mean, it's a change of character, but not much has happened, in here. Let's see, from the bottom of this to the current price is only about 4%. I'd need to see a pretty solid breakout here. The PMO is in decline because price pretty much has been moving sideways. Stochastics are moving down. That suggests to me that we're going to get a move to the downside. Looking in the thumbnail, since we can't see much here, you can see price is topping out currently. This doesn't look like a buy to me. This looks like a sell. Maybe take advantage of the fact that it is sitting where it is right now. Transportation really had a great run, but I would be really careful because it is overbought now, and that's what this stock looks like.
Let me insist that you check before you do anything to see what's going on with this. I think that this is a buyout. That's what I think.
Yeah.
I'll bet I'll be proven right. Okay. RCI.
The price pattern does not impress me. Struggling to get above the 200-day EMA. I do see kind of a cup with handle here, but it didn't really resolve in a way that I would like to see. PMO on the sell signal right now, you can see it's underperforming its group. It's underperforming the S&P. Certainly not a buy here. If anything, a sell. I think you will probably be happy about that. There's a lot of downside, I think, that you could end up sucking up here.
We're down to 20 seconds.
Oh, okay. Well, then that does it. I'm going to stop our share. Thank you all for coming into the trading room today. We'll be back next week on Monday. We invite you to check out our website at DecisionPoint.com. We're currently have a trial running. It's not advertised on the website. It's for you in the trading room. Just use the code DP trial and the number 2, and you will get a 2-week trial to try out our services and get some of those diamonds in the rough and see what you can do with them. Thank you all again for attending, and good luck and good trading.